Mohit, there's also news that came in yesterday with Sebi, which has announced the discontinuation of certain mutual fund categories, and this includes the children's and retirement funds. And this Sebi saying is part of the broader overhaul of the mutual fund categorization norms. Now stopping accepting fresh subscriptions is one part which I think investors will understand easily. But what happens to investors who have already subscribed to certain schemes which are pertaining to children's growth funds as well as retirement schemes? What happens to that money? Is that going to just go into another sort of similar risk, similar return kind of a category? And what should investors really do who were actually looking at retirement and children's education as part of their investment portfolio?
Yeah, Karthik. Look, I think the underlying tone of SEBI is to rationalize the whole ecosystem, reduce the kind of schemes which are there, and reduce the clutter around it. If you go deeper down the layer and check these schemes, they're more like flexi cap funds or more like diversified funds, right? So what SEBI is saying is, if you aren't managing it through the life cycle of an investor, and you're just running any other flexi cap or diversified scheme, then might as well merge it with the similar possible scheme which is already available in your ecosystem and reduce this category altogether. To my mind, it's a great rationalization. They've also introduced a category called life cycle funds, which perhaps might replace this, but which will have a varying proportion of equity and debt as per the time cycle of an investor, right? So at a particular age, it will automatically reset into a differing component of equity and debt, which perhaps might be a longer way of looking at goal based planning, financial planning, and also can be a good counter to your NPS allocations. So I think it's right rationalization. Investors need not worry. I think the schemes will get merged to the closest possible resemblance within the same fund house. And there is no real impact on the investors. Yes, just that the nomenclature will go off, and perhaps if they were planning for a particular goal, that goal will have to be aligned with the new scheme thereof.
Okay. Does it seem a little counterintuitive? Because when you talk about goal-based investing, children education and retirement are perhaps two of the most common goals, but now you don't have funds with those names. So does it become a little counterintuitive for the uninitiated folks who want to sort of do their own DIY investments?
Category wasn't very big. I get your point,
Okay.
Karthik. It is counterintuitive to that manner, but I think when you go in for a life cycle fund, I think that's a much better and a much evolved way of looking at these kind of allocations rather than just saying this is a children or retirement fund. Many a time these funds were just getting sold by the name, and more because of the emotional value attached to the name rather than the real substance in the fund or anything more than that. So I think it's more how the market was using it or misusing it, and SEBI trying to align it. And then perhaps introducing a newer category which is more a goal based kind of a category. So yes, counterintuitive to some extent, but I think it is for larger good and for larger investor clarity.
All right, Mohit Gang, as always, pleasure having you here with us on News 9. Let's leave it at that for today, but thank you so much for your time.